getting ahead of themselves in terms of UK growth, in terms of the strength of this growth, how sustainable it is?
No, I don't. Certainly in terms of the economy widely, expectations of growth above 2.5% I think are extremely well-founded. Our own GDP forecast for 2014 is 2.7%, but we view the risks to be tilted to the upside. What we're a little bit more reticent about is the interest rate outlook, and the yield curve has been steepening over the last couple of months. Will we see an interest rate increase ahead of the general election in Q2 2015? Our central view is probably not, so I think that's something to watch.
What about long-term effects of consumer spending? And I mean falling savings rate, stagnant wages, and what this says about the consumer, what it says 6, 12, 18 months out.
Well, here again, we're relatively optimistic about what's going on in the consumer sector, because although the official average earnings numbers show that pay growth is running at about 1% a year, what we're also looking at is a big increase in employment, which is supporting the broad income background. And sure, the saving rate fell a little bit during the third quarter, but it's still a little bit above 5%. So our view is that consumer spending can still run a little bit above nominal income growth, and the saving rate is still at respectable levels.
And what's Carney, just to finish up with Philip, what's Carney's message going to be for the first few months of this year? Is it going to be more of the same, and is it going to be a little bit more backpedaling? What? I mean, I don't want to sound unfair when I say that, but what is his message going to be to the market?
Well, I think broadly the message is still going to be that an interest rate increase is a long way off. And to put that message across convincingly, the Bank of England has to change its threshold-based interest rate guidance. So what we expect technically is some modification of the guidance, namely that the 7% unemployment threshold may well still be there, but there'll be some qualitative adjustment to it, perhaps with some comment on, well, we need to see higher pay growth before we seriously entertain the idea of a rate increase.